Welcome back, you guys. Y'all ready to get back in the game tomorrow? I'm just joking. It's Labor Day. Enjoy your day off. That does not mean, though, that we have to stop thinking about what we're going to do on Tuesday. And another one of the companies I call the COVID crushers just happens to have earnings. And that company is Slack. Now, Slack is a real mixed bag when it comes to its financials. However, its business model is coming off a pretty significant tailwind. Slack saw an almost exponential increase in adoption throughout the COVID-19 crisis. But that's enough foreplay. Let's just get into it. If you haven't heard of Slack by now, I don't know where you've been. But to give you the quick summary, Slack is a software company that offers a lot of cloud services solutions that made work from home possible for a lot of companies. Now you can imagine with the onset of the beer bug that demand for such services increased pretty much exponentially. And this has been reflected pretty clearly in Slack's revenue growth. But what the fuck is going on with earnings? They tend to beat EPS estimates, but their EPS estimates are negative. And despite the fact that they beat their EPS a lot of the times, in previous earnings, they've pretty much only ever dumped or stayed the same in share price. It's almost like investors are surprised when this company that's never generated any earnings doesn't generate any earnings. Now, despite all this, their put to call ratio right now is actually super bullish. But the last company we saw with terrible financials and a good put to call ratio was Docu. Docu saw a huge run up prior to earnings and then pretty much became a submersible when they predictably released shitty earnings. And it seems like Slack is already pricing in the fact that it's probably going to be a disappointment, seeing a more than 17% decline in share price in the days leading up to earnings. Ideally, for a bearish entry, I'd like to see a little bit more upward movement in the stock price on Tuesday. But if I don't get it, I'm still going for it. So the play for me is going to have to be a call credit spread at the 32, 32.5 with a 9/11 expiry. Then I'm going to pull a similar move as I did on PDD a couple weeks ago and turn that into a short iron condor by selling a put credit spread post earnings. All right, that's it for my work play. If you're new here, make sure you're subscribed so you can get these plays while they are still actionable. I do these videos almost every day, but if you get them late, they're gonna be useless. Finally, if you need a good broker, a good source of stock market news, or a good source of options flow, check the referral links down below. Also, I highly encourage you to join the OU community Discord. There's a link for that down below. It's completely free, as is the rest of my content. Thanks for watching, guys. Good luck, make some money.